So Columbus, I'm the CEO of Columbus, as Jordan mentioned. We're spinning out our U.S. assets into Allegiant Gold, and there's a few reasons for that. The first is we think that Columbus is a potential takeover target, and we'd like to prepare Columbus and keep it nice and clean and ready for a takeover if it were to occur. So we're therefore taking all our U.S. assets and we're going to spin them out into this company we call Allegiant. As you can see, we're U.S. focused. There's a second reason for the spin out, and has to do with precedent transaction. There's quite a long history of precedent transactions that demonstrate that you can unlock a lot of value in assets that are not being recognized by putting them into another company. Columbus Gold has a 5 million ounce deposit, and that's where we were focusing most of our attention for the last 6 years. So our U.S. assets, despite their quality, were just not being recognized. I give one example here of a precedent transaction. When Exeter spun out Extorre, you can see that those Extorre assets were getting no value from the market, and on the first day of trading, they created over $100 million in value for shareholders. Another example, Vista Gold spun out Allied. We all know how that ended, not very well, but it started out very well. It came to trade its first day of trading with a larger market cap than Vista, with $250 million market cap. So not to disparage Columbus in any way, but Allegiant is the right story at the right time at the right place. The timing is just right for it. And I would not be surprised if Allegiant had a larger market cap than Columbus pretty quick after the spin out. I don't know if that'll be a day or a month or 6 months, but I think it's pretty imminent given that we're mostly in Nevada and given who our CEO is and just the track record and the history. So Allegiant holds 14 projects located mainly in Nevada. 11 of our projects are in Nevada. Then we have projects in Arizona, New Mexico, and Utah, but we're Nevada focused. We like Nevada for obvious reasons. We all know how important Nevada is to the gold business, but we particularly like it because of the track record of Andy Wallace, our Chief Executive Officer. Now, it wasn't easy to get Andy to come on as CEO, and in fact, it took 10 years of arm twisting. But he finally agreed to do it. And you can see on this slide, Andy is the CEO of Cordex. He's the principal of Cordex. And Cordex is a small private exploration group that operates in the United States. They've been operating for 40 years, initially under John Livermore's management, and now under Andy Wallace's management since the 1980s. And Cordex is credited with 9 discoveries in Nevada, 9. 8 of those are producing or former producing gold mines, and they're all listed here. It's a pretty impressive track record, and a notable thing that somebody said in the panel this morning was that 4% of geologists make 100% of the discoveries, and I think the slide really demonstrates that. So under Andy's management, Cordex made 5 mine discoveries. It's pretty impressive. However, that's not what jumps out at me when I look at the slide. It's not the track record. The track record speaks for itself. What jumps out at me is what happens every time there's a new gold cycle. Every time there's a new gold cycle, it's the same projects just getting recycled. They just keep coming back. So if you look at this slide, Hasbrook Mountain is now owned by West Kirkland. These were all found by Cordex. They all went to major mining companies, and now they're mostly with juniors. Sterling and Daisy are now owned by Northern Empire. They're great assets. We like them. But they're recycled projects, and there's nothing wrong with that. It's a great business plan. You go looking for gold where there's already gold, and you have a different geological interpretation. Newmont still has Stonehouse, but Marigold is now with Silver Standard. Pinson is with Waterton. D's got Premier. Or Premier's got D, and Rye Patch has Florida Canyon. So Cordex found them all. Cordex found them all the same way. Basic grassroots prospecting. Going out in the field and looking for gold in a geological setting that is known to host big gold deposits in Nevada. That's how all of these were found. So Allegiant's projects are not recycled projects. We have 14 projects that were all found by grassroots prospecting, except for one. So 13 of the 14 were found by getting out on the ground, looking for gold in a productive geological setting. One of them does have a historical connection, and it was drilled in the 70s and 80s by Chevron, and it's one of our flagships. It's called Bolo. The other 13 were found, just like all those other ones, prospecting. So let's talk about our two flagships. I know it's unusual to have two flagships, but we do. We have two really great projects that are more advanced than the other projects. Eastside is district scale. It's about 67 square kilometers. It's in an area of Nevada with amazing infrastructure. The power line runs through the property. The highway from Reno to Vegas runs through the property. So it has great infrastructure, great access. Bolo, there's a small resource. We've never done a 43-101 on it yet, so we can't talk about it. But there is a resource there, and it's really excellent grade. It's what everyone in Nevada is looking for. It's a 2 gram, 1.7 gram deposit with lots of upside. So east side, as you can see on this slide here, looking north to south, is about 10 kilometers. It's district scale. All of our work to date has been focused, I'd say 98% of our work to date has been focused on what we call the original zone to the north. Way down to the south, we acquired some claims off of Seabridge with about 300,000 ounces of historical resources. In between, there's about a dozen targets that need to be drilled. As I said, infrastructure is great. You can see the power line passing through the property and the highway. And the metallurgy is good. We've done metallurgical testing on the oxides, which run very deep on this property. They go down about 1,000 feet. Eventually, like anywhere in the world, you get in the sulfides. But the sulfides are not refractory. They leach very well. In fact, you get the same amount of gold out of the sulfides as you do out of the oxides, and you get 3 times more silver. This is a cross-section of the pit at Eastside. There's a few things here that I'd like to talk about. First is the strip ratio. So the strip ratio on this pit is 5-to-1. The reason for that is the whole area to the west in that circle is undrilled. We have one hole there. That whole area is undrilled. Over to the east, you can see there's no gold. In the pit, there's no gold because it's not drilled. But we know it's open to the east because all the holes bottomed in ore. We know it's open to the west because we have one hole there that's mineralized from top to bottom. And if I was to show you a plan view of this deposit, of the pit, looking from the sky and looking down, you would see the same thing on the southern part of the pit. You'd see an area that's undrilled, but it's in the pit, so it's classified as waste. So our program here is to drill 50 holes, focusing on filling in the area in the west, filling in the area in the east, and filling in the area in the south. And what we think is going to happen is the resource could potentially double. In this particular cross-section, there's 700,000 ounces in the pit. Bolo is our second flagship. We drilled it in 2013. As unpleasant as it might be to think back to those times, you'll recall that it wasn't a great gold market, and we drilled an amazing hole and nobody cared. It's just, there was no appetite for gold stocks in 2013. But look at that intersection. There's 132 meters of 1.3 grams from surface. In the same hole, there's 30 meters of 3.24 grams. This is a typical Carlin type deposit. We have several kilometers of structures you can see from the image on the right. And I'm not a geologist, but it was explained to me this way, that there's 2 types of Carlin deposits. And one type is like a pearl necklace. You go along the string and it bulges out, and there's a small deposit on a pearl, and you keep going along the string and it bulges out again and there's another small deposit. So this is how one type of Carlin deposits form. You drill along the structure, you find one pod, you keep drilling along the structure and you find more pods. So these structures are all mineralized all over the place at surface. In the area of this cross section, we did a little back of the napkin. It's not 43-101 or it's not official. But something happened this year that's a real game changer for this project. We drilled 14 holes into the footwall, 12 into the footwall, 2 into the hanging wall. And we announced this, so I can say this. 12 of the holes were strongly altered half from surface. Many of those holes were drilled in the footwall. So where we once thought we had a very narrow structure with really great grade, we now feel pretty confident just from looking at those holes that there's a high probability that the holes in those green rocks, which is the Roberts Mountain Formation, could be mineralized, which significantly increases the scale of this deposit. We're drilling 10 and 12 months. We're going to drill East Side. We're going to drill Bolo. Most of the capital is going to be focused on those two projects, rightfully so. But we have 8 other projects that we're going to drill in the next 12 months. And you can see 3 of them here, and there's 4 on the next page. All of these 8 projects were found by Andy Wallace and his team prospecting, just getting out on the ground, finding gold in the right geological setting, defining drill targets. All have had mapping, geochem, geophysics where applicable done. There's no early work to do here. They just need to be drilled. And that's how Cordex made its discoveries, and that's why they have a great track record. 8 drill-ready discovery opportunities. I'll add that these projects are all 100% owned by Allegiant. They're drill-ready, I said that, but 7 are also permitted and bonded, and we're ready to go. So there's going to be a lot of drilling activity starting in December at Eastside, and then essentially there'll be 2 drills going for 12 months. There'll be a drill going between Eastside and Bolo, and there'll be a drill going to each of these 8 projects during that 12-month period. So we're going to drill at Eastside where we have the potential to double the resource. Here's the budget, 20,000 meters. We have assays pending on 14 holes from Bolo. That's pretty exciting, and we're planning already to drill another 30 holes. And then the other 8 projects are going to see very modest first pass drill programs, 8 to 12 RC holes, 2 to 400,000 Canadian dollars per property. And to be honest, we'll probably end up dropping 4 or 5 after that. And that's what Cordex is good at. They don't get married to anything. If it doesn't have the potential to be big, they abandon it. But perhaps 1 or 2 very significant things could come from a drill program like that. I know I'm running out of time. I only have 10 minutes. So I'll mention that Allegiant is a private company. We're not public yet. The shareholders vote on the spin-out on November 27th, right around the corner. We'll come to trade around the 2nd week of December. We're presently carrying out a financing in parallel with the spin-out. We're raising up to $12 million. And what I want to show here is if we do raise $12 million, how do we stack up against our peers in terms of valuation? I'm not a big fan of peer comparisons because it's never comparing apples to apples. But nonetheless, some bankers put this together, and we're on this list because all the companies here have resources. Allegiant is on the very bottom. If we were to raise $12 million, we would have a market cap of $35 million. And if you strip out the cash, we'd have an enterprise value of $23 million. So if you just go up a couple of rows to the mean and median of the peers, we're going public at 1/3 to 1/2 of our peers in terms of valuation. So we're leaving a lot of room here, a lot of upside for new incoming investors on the private placement. So I think my 10 minutes are up. If there are any questions at all, we have a booth. I'll be there shortly. There's a picture of Jorge here if there's any interest in participating in the private placement. Jorge Martinez, my very handsome colleague, would be happy to talk with you. And I'd really appreciate your time. Thank you very much.